2022, he was fired by OpenAI, the company behind ChatGPT. Less than 2 years later, he ran a hedge fund, a private investment firm, reportedly managing more than $20 billion. $20 billion in under 2 years. At 24, reportedly built on massive, early bets that the AI boom was real. Then, a public filing revealed something strange. Contracts tied to roughly $8.5 billion of AI chip stocks. Contracts that gain value if those stocks fall. Was the AI boom's most famous believer betting against it? Or just buying insurance? Nobody outside the fund knows. To understand the filing, you first need to understand the man behind it. His name is Leopold Aschenbrenner. And his story begins with a collapse. Leopold Aschenbrenner was born in Germany to 2 physician parents. At 19, he graduated from Columbia University as valedictorian, first in his class, in economics and mathematics. That is the kind of resume that opens any door on Wall Street. He picked a stranger one. In February 2022, he joined the FTX Future Fund, the charity arm of Sam Bankman-Fried's crypto empire. His job, barely a year out of college, helping give away a billionaire's fortune to protect humanity's future. FTX was then one of the most admired companies in finance, its founder hailed as a once-in-a-generation genius. In November 2022, the empire behind the Future Fund collapsed almost overnight. One of the largest frauds in financial history. He did not see it coming. Almost nobody did. The money was gone. The founder was later convicted of fraud, and the Future Fund evaporated overnight. It was his first close look at how quickly brilliance, confidence, and unchecked risk become impossible to tell apart. His next employer was the most important technology company in the world. In 2023, he joined OpenAI on a small team called Super Alignment. Its mission: figure out how to control artificial intelligence smarter than humans before it exists. Led by 2 legends, Ilya Sutskever and Jan Leik. The company was racing to build the most powerful technology in history. His team's job was to make sure it stayed safe. Aschenbrenner says he wrote an internal memo warning that the company's security was not ready to protect its secrets from foreign espionage. Then came a breach. A hacker reportedly broke into OpenAI's internal messaging system and stole discussions about AI technology. After the breach, Aschenbrenner says he took his warning directly to OpenAI's board. The response, he says, was not gratitude. He received a formal warning from Human Resources. 1 year later, in April 2024, OpenAI fired him. Why depends on who you ask, and the 2 versions do not match. OpenAI said he was dismissed for sharing internal information outside the company. Aschenbrenner says the document was a harmless brainstorming file, checked for sensitive details first. He also says he was told his security warnings were a major reason. OpenAI denies that. It says the firing was unrelated to the memo. Whichever version you believe, what happened next made the firing look very small. Within a month, Sutskever and Leik, the 2 legends, had left the company. the super alignment team was dissolved. At 23, Aschenbrenner was unemployed in the middle of San Francisco's AI gold rush, with a firing on his record. Most people in that position call a lawyer. He opened a blank document. In June 2024, 2 months after being fired, he published 165 pages titled Situational Awareness, The Decade Ahead. Its claim: AI capable of most intellectual work, at roughly human level or better, could plausibly arrive around 2027. His argument was not magic. It was three forces moving together: more computing power, better training methods, and AI beginning to help improve the next AI. If those forces fed each other, a decade of progress could compress into a year or two. Trillion-dollar computer clusters, a national security race between America and China. The title was the thesis. Almost nobody, not investors, not governments, was seeing clearly what was coming. The world was sleepwalking. The essay did not read like analysis. It read like prophecy, and it spread like fire. Within weeks, it was being read in Silicon Valley boardrooms and quoted in Washington. Podcasts, policy circles, everyone had an opinion. The unemployed 23-year-old had done something strange. He had turned getting fired into authority. But here is what separates him from every prophet before him. He did not just predict the future. He bet on it. In September 2024, he launched a hedge fund named after the essay, Situational Awareness LP. It reportedly opened with about $225 million. And look at who wrote the checks. Patrick and John Collison, billionaire founders of Stripe. Daniel Gross. Nat Friedman, former chief of GitHub. Silicon Valley royalty, backing a 23-year-old's first fund. His partner, Carl Schulman, a researcher famous in AI circles for thinking decades ahead of everyone else. The strategy was simple to say and brutal to execute. Do not bet on which AI company wins. Own the picks and shovels. In a gold rush, most miners go broke. The man selling shovels gets rich either way. So the fund reportedly bought the infrastructure every serious AI company needs: advanced memory chips, electricity, data centers, and reportedly one position above all, roughly a fifth of the fund in Anthropic, the private AI lab behind Claude. Then, the numbers started coming in, and they stopped looking like investment returns and started looking like typos. According to published reports, roughly 200% in 2025, more than 1,000% since launch. By mid-2026, published reports put the fund's assets above $20 billion, less than 2 years after launch. Even Jane Street, one of the most secretive and successful trading firms on Earth, reportedly came in as a partner. The fired researcher now ran one of the most talked about funds on the planet, built on one belief: the boom is real, and it is just beginning. Which is exactly why what he did next made no sense. Remember the filing from the beginning of this story? Let's open it properly. Every quarter, Large investment firms must publish a partial list of their U.S. investments. The form is called a 13F, but it is an incomplete window. It does not show private stakes like Anthropic, not cash, not most foreign holdings, and it never explains why a position exists. The fund's filing listed just under $4 billion of American stocks it owned, plus option contracts tied to billions more, and one line stopped Wall Street cold. Put positions, contracts that gain value when a stock falls, tied to roughly $8.5 billion of shares in the companies powering the AI boom. $2 billion tied to SMH, a basket of the biggest chip stocks. $1.5 billion to Nvidia alone. More on AMD, Broadcom, Oracle. These are not obscure names. They sit in pension funds and index portfolios around the world. When someone this informed buys protection against them, people notice. But the filing does not show what the fund paid, when the contracts expire, or how they fit the rest of the portfolio. Think of it this way. You own a beautiful house in a neighborhood where every price has doubled. You can believe in the neighborhood and still buy fire insurance. So is the prophet of the AI boom betting on a crash? Honest answer: nobody outside the fund knows. A filing shows positions, never intentions. There are at least 3 very different stories these contracts could be telling. Possibility 1. Insurance. The fund owns many companies that benefit from AI. The puts may simply soften the damage if those shares fall. A seatbelt, not a prediction. Possibility 2. The boom may be real, but some chip stocks may have risen too far, too fast. Possibility 3. The options are one piece of a more complex trade, one that simply cannot be read from a public filing. Notice what all 3 have in common. None of them is a prediction. Protection is not prophecy, even when it comes from a prophet. What is certain? The man who saw this boom before almost anyone is now paying real money to be protected if chip stocks fall. For balance, his famous prediction, AGI, around 2027, has not arrived. Parts of the essay have aged well. Experts are split on the rest. But prophets are not graded on their essays. They are graded on what happens next. So the story rests on a contradiction. The boom's loudest believer, holding billions of conviction in one hand and insurance against it in the other. Aschenbrenner is 24, and his trade is still open. The next filings will show whether the insurance grew, shrank, or paid out. History does not repeat itself, but on Wall Street, it rhymes more often than anyone likes to admit. When this trade resolves, whichever way it goes, we will cover it. Subscribe so you're here when it happens.